Hey everyone, welcome to CoveredCall ETF Investing. I'm Jordan, and this is your central hub for deep CoveredCall ETF data. And in today's video, we're going to be looking at a snippet from a Google Sheet I created called the CoveredCall ETF ALLSTAR Tracker, a place where you can have all of your Canadian and US listed CoveredCall ETFs filtered in one location to explore performances, 3-month average volume, yields, dividend streaks, distribution changes, taxes. There's a lot there, and that can all be picked up on my Patreon page, which will be in the description below, or in the pinned comment section, the very first comment that you'll see. So let's check out US CoveredCall ETF yield changes right now. Let's talk about some of the yield changes with American CoveredCall ETFs. We'll talk about some of the new funds that were added to this tracker. We'll talk about yield and distribution changes when it comes to the American funds. So let's start with that. I've added Devo, a bit of an older fund, 2017. It's a bit of a lower yielder, but it focuses more or less writing cover calls on dividend payers or well-known dividend payers. Bali, I believe, fairly new. And again, focusing on basically the S&P 500. We'll go down the list. We got some new funds by iShares, IVVW, and IWMW. Again, just they're more index-based with the S&P 500 and the Russell 2000. I noticed that with a lot of the American stuff, and which differentiates it from the Canadian stuff, is that the yields on the American side are like Texas, right? Everything's bigger in Texas. Go big or go home type mentality, it seems. And they really love writing cover calls on just the index. I don't know if it's simpler. I don't know if there what kind of other advantages to that. And I appreciate writing cover calls on index-based funds, but it would also be nice to see some diversification when it comes to like writing cover calls on just sectors like American oil and American utilities, maybe American consumer staples, maybe just an absolute pure technology cover call ETF, which we actually get with FEPI. I should, before I go any further, there is actually one by Rex shares that is FEPI, and it yields an interesting 25%, much different than some of these like Yield Max and Defiance ETFs, where it actually owns its underlying, unlike those other ones where it's synthetically generated, and there are these strategies to make it manipulate price to get you the payout that you're so desire. Okay, so what did we look at? We looked at the iShares stuff. Let's go down the list here. Round Hill Investments, QDTE, XDTE, and YBTC. These two, which covers the NASDAQ 100, these do daily option trading, which, in the long run, we'll see how that outperforms funds that do monthly cover call writing or ones that do weekly cover call writing. These ones do daily writing on the index of the S&P 500 and the NASDAQ 100. What makes these funds extra interesting is they actually pay out weekly. So we'll see how that plays out. But what might be really nice about that is that we see that it can capture more short-term volatility in the market, right? There's sometimes just a few days or even a week where the market does some crazy stuff. I want to say doing this video, the last, call it 2 weeks of April, maybe the first week of May, we've seen incredible volatility in the market, right? Funds going down a couple of percentage points, rising up a couple of percentage points, making almost what I would consider like a W shape, sort of. So we'll see how that plays out, but these funds can certainly take advantage of that. Okay, so let's talk about yield for a second here, because maybe some of you guys are seeing this for the first time. Like, to me, I gotta say, like seeing these kinds of yields, for me personally, they're not for me. Nothing in this range is, once again, I don't invest in single stock ETFs, and much of this is single stock. I mean, we get Defiance here with a what would look like Russell 2000, a diversified fund. I mean, I put diversified because it's trying to track 2,000 companies. But typically what Defiance does is they're using different derivative strategies to basically mimic the underlying. So it doesn't actually own its underlying investments. Whereas my mentality is, it's more akin to Warren Buffett's analogy of owning the farm. It continually produces something. It's tangible. So for me, that just doesn't line up with just my kind of own internal rules, and also just my my general goals of what I'm trying to do within the next year, 2 or 3 years or so. So anyway, we'll go down the list. Again, we talked about Pure Technology. FEPI actually owns its underlying, and I believe its performance overall has been, say in the last 6 months, has actually been pretty admirable for a fund that yields something so high. You would think that it wouldn't be able to keep up with that, but it's a high yielder, and you get a little bit of fund price stability in there as well. Going down the list, this is kind of more the range I typically am more interested. I believe that I think for my own strategy, which is more of a growth-centric nature around covered call ETFs, I'm probably more in the 10 to 12% range. So when I see funds in this range, I'm actually more interested in these funds when it comes to looking at price growth over time, but also getting a decent yield as well. And I think there are some interesting funds in here, like JPIC, which is a pretty plain Jane covered call ETF by Goldman Sachs at 11%, tracking the NASDAQ 100. I think its counterpart, what is it? Let's try to find it. I feel like GPICs, right. So GPICs slightly lower yielding, but tracks the S&P 500. We have the other fund that I actually have a lot of appreciation for on the American side of things. Even though I think going forward, I know I've been saying that I want to invest more in American covered call ETFs, but right now I currently just have HYLD.U. And I think now that I've really solidified what I want to do over the next couple of years and the funds that are going to help me get there, I'm just going to keep HYLD.U, and I'm not going to diversify out of that. But if I was to, I think SPY would be basically it's a top contender. It would be. It's got a little more history under its belt now, and it yields 12.18%. If I remember correctly, let's see, what's its strategy? It pays out monthly. Its gross fee 0.68%, 100% portfolio coverage, out of the money. But its AUM has just been exploding like crazy, over $1 billion now. It's over $1 billion now. I believe there might be a character in there that's a little bit off. I want to say it's probably closer to 1.3 billion, but still really impressive. Exceptionally impressive for SPY. Other yields from diversified funds that I think are kind of interesting. Like SVOL, again, for me personally, it has no underlying. It shorts the VIX. So this is the kind of fund you would buy when volatility is going up. You buy it on the way up, and then when volatility is falling, then that's when I think this fund is doing really well, and you're extracting amazing income from SVOL. But I know the community really has always appreciated SVOL. So other ones to consider, maybe, let's see, what else do we got on this list? iSpy, could buy ProShares. It's a little bit newer, kind of interesting. It does have an interesting fund where it owns its underlying. It doesn't exactly use cover calls, but it uses its underlying as collateral to generate its yield. through credit swaps and futures contracts, if I remember correctly. Let's see, what else do we got on the list? A little bit lower yielders. We won't talk about any of that stuff, but what we will do is head over to the yield tracker. We'll swap out Canada and we'll put in USA. So in this, we'll go through some monthly changes. Maybe we'll look at year-to-date changes. Again, this is something you can pick up for yourself on my Patreon, and you can go through this yourself to look at any of these changes. So Coiny with a just incredible yield increase. We'll keep seeing how this story plays out with this crypto-based single stock covered call ETF. Let's see what other kind of big ones. I'm kind of more interested in just the diversified stuff. So DYLG, which is considered the Dow 30 covered call and growth ETF. So usually that doesn't yield very much, but I mean it's increased considering it was once at 2.65% back in April. Let's go maybe down to some more modest changes. We can see a YMAG, which I mean, I think the whole Magnificent Seven advertising is I think now it's kind of out of date. So I just think YMAG, it's YMAG, like why invest in the Magnificent Seven when most of those funds aren't even performing up to snuff at the moment. But nonetheless, YMAG is, with those 7 companies, its yield is up to 38%. All right, what other kind of diversifiers do we got here? Other yields that are increasing over time. You know what we'll do? How about this? Let's do it. Let's just do it by a diversified fund category. Okay. So these are all the diversified funds that have been increasing in yield. So we were just DJIA by Global X is looking like it's one of the bigger performers of yields that are increasing amongst the diversified funds. What else are we seeing here? What other ones are kind of interesting? GPIX, its yield is kind of just roughly the same. Same with, well, I would say iSpy by ProShares. It came out of the gate guns blazing a little bit, but I think it's kind of leveled off. And maybe this might be the range it sort of just falls into. Of course, by Defiance, you got IWMY, and that yield has been kind of bouncing around a little bit. Of course, JEPI, one of the bigger, well, I would say JEPI is the biggest covered call ETF on the planet. And no, wait a minute. No, that's not. I meant to say JEPI, this one. JEPY is sort of it's a play on JEPI. So what do we got here? It started the year almost at 10%, but ever since then, kind of hovering around the 7% range. Again, I'm not as interested in those kinds of covered call ETFs when they're below 10%, but hey, you get into the 9.5% range, I'm much more interested in that. But we can go through, even some of the crypto stuff. YBTC recently added with a 50% yield. Maxi by Simplify, a little bit of a smaller yielder, but if you're looking for covered calls on crypto, there might be something there for you. These other diversified funds will be kind of interesting to track, from Devo and Bali and Poppy. The Morgan Stanley, I just like saying it, the parametric equity premium income ETF. It just sounds cool to say. Again, see how they do over time, but not much we can say about them now. But I would imagine these funds, for what we see, they're probably going to stick around in that range. So like I said, naturally I stick with kind of the more 10 to 12% yielders in my TFSA for growth. Again, if you're American watching, the TFSA is just a tax-free savings account on the Canadian side. It's just an account that we can invest in and we don't have to pay tax on. And there's basically no age limitations whatsoever to it. So pretty awesome from that regard. Hopefully you liked that small snippet of the CoveredCall ETF ALLSTAR tracker. There is a fully 1.5 hour unedited version over on my Patreon, which will be in the description below, so you can check it out there. Some other features in the Patreon are you can actually have access to the tracker yourself. There's going to be also live meetups every single month that you can be a part of. Get to ask me all of your questions in a small group setting, especially while the Patreon community is fairly small. That's something I'll have the ability to do. So come on over there, check out the full version of this video. Or if not, then just wait for just smaller releases throughout each week and continue to learn about CoveredCall ETFs in more bite-sized chunks. So with that being said, hit all the buttons to the like and subscribe variety, and I'll see you all in the next video.